On April 2, 2025, President Donald Trump declared what he called Liberation Day, a bold economic offensive that imposed tariffs on dozens of nations, rewriting the rules of global trade overnight. Framed as a battle to reclaim American manufacturing dominance, these tariffs, some reaching as high as 54%, did more than disrupt diplomacy. It ignited a global firestorm. Markets crashed, allies revolted, and China retaliated. Suddenly, the world's most powerful economy was on a high-speed collision course with chaos. But was this a calculated move or a dangerous gamble? In this video, you'll learn what these tariffs mean for your wallet, your job, and the balance of power on the world stage. Understanding the Liberation Day tariffs. When President Trump stepped into the Rose Garden on April 2, 2025, flanked by American flags and a chart in hand, few expected the seismic announcement that would follow. With the stroke of a pen, he enacted what he dubbed the Liberation Day tariffs, a sweeping set of trade duties designed to shift the global economic balance in America's favor. At the core of this policy was a universal 10% tariff on all imports, but the real sting came with targeted escalations. Countries running large trade surpluses with the US faced even steeper penalties. The headline grabber: China. Trump imposed a jaw-dropping additional 44% tariff on Chinese goods, bringing the total to 54%, a figure unseen in modern global trade relations. The administration framed the move as a long overdue course correction. For years, Trump argued, America had been on the losing end of unfair trade deals, bleeding jobs, factories, and leverage to foreign powers. The tariffs, he claimed, were not just about economics, they were about national dignity. We're not just bringing back manufacturing, he declared. We're bringing back American pride. The message resonated with parts of the country that had long felt abandoned by globalization, especially in Rust Belt regions eager for economic revival. But the critics were swift and scathing. Economists warned that such blanket tariffs could trigger a domino effect across global markets. Established supply chains, the intricate networks that allow products to move seamlessly across borders, could be shattered. With tariffs driving up the cost of imports, everything from smartphones to sneakers could see sharp price hikes for American consumers. Businesses that rely on foreign parts and materials, like US-based manufacturers, could suddenly find themselves paying more to make less. Worse still, foreign governments were unlikely to sit back and absorb the blow. Many viewed the tariffs as economic aggression, an open challenge to the global order of free trade. The term trade war went from hypothetical to headline in a matter of hours, and the world braced for impact. As Trump's bold experiment took effect, economists, investors, and ordinary citizens alike were left asking the same urgent question: is this the reset America needs, or the first step toward a global economic meltdown? Immediate market reactions. It didn't take long for Wall Street to react violently. Within minutes of Trump's Liberation Day tariff announcement, red began bleeding across the financial charts. The S&P 500 plunged more than 4%, a move so steep it echoed the early pandemic panic of 2020. This wasn't just a blip, it was a statement, one loud enough to rattle investor confidence across the globe. Traders weren't just reacting to a new policy, they were responding to the uncertainty and chaos that came with it. The Dow Jones Industrial Average tumbled over 1,400 points, while the tech-heavy NASDAQ Composite slid 4.6%, dragging the value of major corporations into freefall. Apple, Tesla, Amazon all took hits, and it wasn't limited to tech. Retail, energy, and manufacturing sectors also saw declines as fears grew over what tariffs would mean for supply chains, profit margins, and international demand. Analysts were quick to respond, and their outlooks were sobering. UBS cut its S&P 500 year-end forecast within hours, warning clients of prolonged volatility and structural risk. RBC Capital Markets echoed the sentiment, urging caution and predicting that global capital flows could begin to shift away from the US if trade tensions persisted. In the background, whispers of a bear market, once unthinkable in this post-COVID boom, began to spread. Perhaps most telling was the spike in the VYX, often called the market's fear index. It soared 36% in a single session, a brutal sign that uncertainty had not only entered the room, it had taken the wheel. Investors, already skittish from months of global inflationary pressure, now faced an economic wildcard that could rewrite everything from earnings projections to supply forecasts. The stock market isn't just numbers and tickers, it's psychology. And on that day, investor sentiment took a dark turn. The rallying cry for deregulation expansion and American dominance that fueled bullish enthusiasm was suddenly replaced by a new and chilling question. Are we spiraling into a self-inflicted financial crisis? International responses and retaliations. If the United States thought its Liberation Day tariffs would go unanswered, it miscalculated. China's retaliation was swift and surgical. Just hours after Trump's announcement, Beijing unveiled its own countermeasure, a 34% tariff on all U.S. imports, matching the U.S. strike blow for blow. But that wasn't all. China also moved to tighten export controls on rare earth materials, the critical minerals that power everything from smartphones to electric vehicles and military-grade tech. For the U.S., already dependent on these imports, the message was clear. China was not backing down. The stakes of this tit-for-tat escalation were suddenly higher than trade deficits. Rare earths are the invisible engine behind the tech world, and China's near monopoly on their production gives it enormous strategic leverage. Cutting off or limiting access to these materials could cripple entire sectors of the American economy, including aerospace, renewable energy, and semiconductors. It was a move that sent shockwaves not just through the markets, but through the halls of the Pentagon and Silicon Valley alike. And China wasn't alone. Across the globe, US allies found themselves caught in the economic crossfire. Canada, a longtime trade partner, expressed outrage at being lumped into Trump's global tariff plan. Officials hinted at countermeasures targeting US agricultural exports, which would strike a nerve in Trump's rural support base. The European Union, too, began drafting a list of retaliatory tariffs, with French President Emmanuel Macron publicly condemning the move as brutal and unfounded. Brussels signaled it would not only retaliate, but could also escalate by challenging the US at the World Trade Organization. What unfolded was not just a trade dispute, but a geopolitical chain reaction. Nations began realigning their trade strategies, cutting side deals with each other to cushion the fallout, and exploring alliances that might lessen their dependence on the American market. For the first time in decades, the notion of the US as the cornerstone of global trade was being openly questioned. The retaliation also exposed a dangerous reality. America was increasingly isolated. In trying to correct what Trump viewed as unfair global trade, the US had alienated its friends and emboldened its rivals. As the world watched the two largest economies in open economic warfare, fears mounted that a new Cold War, this time fought with tariffs and supply chains instead of missiles, had just begun. Sector-specific impacts. While the shockwaves of the Liberation Day tariffs rippled through the entire economy, few sectors felt the tremor as violently as technology. From semiconductors to smartphones, America's tech industry is deeply embedded in a web of global supply chains. The backbone of this sector relies on precision parts and rare materials sourced from Asia, many of which now fall directly under the weight of Trump's new tariffs. Industry insiders wasted no time raising alarm bells. Dan Ives of Wedbush Securities, a leading analyst and outspoken advocate for the AI and tech revolution, issued a dire warning. The tariffs could cripple innovation and delay progress in artificial intelligence and consumer electronics by as much as a decade. According to Ives, the move is akin to trying to build the internet with dial-up speeds, a costly regression at a time when nations are racing toward quantum computing, smart infrastructure, and space-based technologies. The problem is twofold. First, increased import costs for components mean manufacturers are suddenly paying more for the same parts they've used for years. Whether it's circuit boards from Taiwan, lithium batteries from China, or chips fabricated in South Korea, the tech supply chain is global, and now significantly more expensive. Second, these costs won't stay on the corporate balance sheets for long. They'll be passed directly to consumers, driving up the price of everything from laptops to electric cars. This inflationary pressure hits at the worst possible time. As inflation slowly began to cool following the years of pandemic aftershocks, the tech sector had been recovering. But with tariffs now raising costs across the board, consumer demand could falter. Higher prices on everyday tech may cause buyers to hold off on upgrades, impacting revenue for giants like Apple, Microsoft, and Tesla, and potentially triggering layoffs in a sector that had been driving much of the post-pandemic economic momentum. Startups and smaller firms are also at risk. Unlike mega corporations, they lack the capital to absorb increased costs or the clout to negotiate better deals with suppliers. Many are now facing a grim choice: pass on the cost and risk losing customers, or eat the cost and risk going under. Either way, innovation suffers. In an industry where speed, scale, and cost efficiency are everything, these tariffs don't don't just represent a policy change, they threaten to rewrite the rules of engagement in the tech arms race. As global competitors like China and the EU double down on investments in AI and green tech, the US may find itself stalled, not by a lack of ambition, but by the burden of its own economic strategy. Potential economic scenarios. The long-term economic impact of the Liberation Day tariffs is still unfolding. But one thing is clear, economists are sharply divided. On one side of the debate are those who see the tariffs as a self-inflicted economic wound, warning that higher costs across the board could act like sand in the gears of the US economy. On the other are voices arguing that this pain is part of a necessary recalibration, one that could usher in a renaissance of American industry if the country can withstand the short-term turbulence. The pessimists point to a familiar chain reaction. Tariffs raise the cost of imports, which then forces businesses to either reduce their margins or pass the burden onto consumers. In either case, the result is the same: reduced consumer spending. When people pay more for everyday goods, they tighten their wallets, and when they do, the economy slows. For businesses, especially those that rely on imported materials or operate on thin margins, the tariffs could discourage investment, hiring, and expansion. Add to that the uncertainty rippling through the markets, and the foundation for a recession begins to take shape. JP Morgan recently sounded the alarm, raising its estimate of a global recession to 60%, citing the tariffs as the most significant tax hike on US consumers since 1968. The investment bank's analysts warned that price increases would erode real income, while trade disruptions would inject new inefficiencies into the global supply chain. If businesses hold off on spending and consumers retreat into financial caution, the economic engine could stall hard. However, supporters of the tariffs offer a different lens. They argue that short-term discomfort could lead to long-term gain. By making foreign goods more expensive, the policy may create new opportunities for domestic producers. US-based companies could find fresh incentive to source and manufacture at home, potentially creating jobs and reducing dependency on adversarial nations. In this view, the tariffs are not a sledgehammer, but a chisel, carving out a stronger, more self-reliant economy. But even among optimists, few dispute that the near-term consequences will be painful. Supply chain realignments take time. Factory construction takes years. Workforce training and technology adaptation don't happen overnight. Until that infrastructure is rebuilt, if it is rebuilt, businesses and consumers will be operating in a world of economic ambiguity where prices are high, clarity is scarce, and every decision carries more risk than before. In the end, the greatest danger may not lie in the tariffs themselves, but in the uncertainty they've unleashed. Investors hate unpredictability. So do consumers. So do small business owners. And until there is a clear roadmap, or at least a strategy that can be communicated and understood, the economy may continue to stumble through a fog of volatility. Whether this bold experiment ends in resurgence or recession, one thing is certain: the path forward is anything but smooth. Political and public reactions. As the economic dust settles, the political storm is just beginning. The rollout of the tariffs has ignited a fierce debate on Capitol Hill and across the country, splitting lawmakers, business leaders, and everyday Americans into opposing camps. Supporters of the Trump administration have praised the tariffs as a bold reassertion of US sovereignty and a long overdue reckoning with global trade partners. To them, this is about leveling the playing field and putting American jobs and American pride first. Republican allies close to the president have hailed the move as a strategic masterstroke, arguing that America can no longer afford to be taken advantage of by countries that have benefited disproportionately from free trade agreements. Some see it as a necessary jolt to wake up domestic industries and push US companies towards self-reliance. For Trump loyalists, it's more than policy. It's a symbolic stand for economic independence. But on the other side of the aisle, and even within some conservative circles, critics are sounding the alarm. Democrats and a growing number of Republicans are warning that these tariffs may inflict more harm than good, especially on the working class voters they claim to protect. The fear isn't just about strained diplomatic relations, it's about self-inflicted economic wounds. Higher prices at grocery stores, rising costs for manufacturers, and the threat of job losses in sectors hit hardest by retaliatory tariffs have fueled concerns that this policy could backfire. politically and economically. In fact, the backlash has grown strong enough that some in Congress are now exploring legislative avenues to rein in the president's trade powers, including bipartisan efforts to review and potentially revoke certain tariff decisions. A lawsuit has even been filed challenging the constitutionality of the executive authority used to implement these sweeping economic measures. As the 2026 midterms loom, lawmakers are keenly aware that their constituents are watching and feeling the consequences of every policy shift in their wallets. Public opinion mirrors this divide. In rural manufacturing towns, some residents have cautiously embraced the promise of a return to Made in America glory. But in urban centers and coastal economies where global trade is lifeblood, anxiety is mounting. Small business owners worry about staying afloat, consumers are noticing creeping price hikes, and a large portion of the electorate is caught in the middle, unsure whether to cheer or brace for impact. The Liberation Day tariffs mark one of the most aggressive overhauls of US trade policy in decades, and their ripple effects are only just beginning to unfold. What's clear is that the next several months will be crucial. The world will be watching how markets stabilize or deteriorate. Economists will track inflation, consumer spending, and employment with laser focus. And politicians, perhaps most of all, will be watching each other, calculating the political cost or potential windfall of this high-stakes gamble. Whether these tariffs ultimately achieve their intended goals or spiral into unintended consequences remains to be seen. But one thing is certain, America has crossed a threshold, and there is no turning back.